The Federal Reserve, or the Fed as it's often called, just cut interest rate by 0.25%. This was pretty much what everyone was expecting. Now, you might be a little confused. Stock market went up, but so did mortgage rates. Why would mortgage rates go up after the Fed cut rates? Well, the way the market works is that it's always looking ahead. People who follow this stuff closely had already guessed that the Fed was going to cut rates. So mortgage rates had already dropped a bit over the last few weeks in anticipation of this announcement. The rates we saw yesterday were just a reaction to what the market had already factored in. During the meeting, the Fed chairman Jerome Powell said that their policies have been pretty restrictive, which is a signal that they have more room to make cuts in the future. He also mentioned that the economy has slowed down a bit in the first half of the year. The Fed's main focus has been on managing inflation, but now they're also looking at the job market, which has become more of a concern. Powell pointed out that the number of new jobs being created has slowed down, and the unemployment rate has gone up a little, even though it's still pretty low overall. He said that the number of new jobs is actually below the level needed to keep the employment rate from rising, which is why we've seen it tick up. When it comes to inflation, Powell said that it's gone up and it's still a bit high. He believes a small part of that increase is due to tariffs, but he thinks that's just a temporary thing. He also noted that the cost of services, like things you get done instead of things you buy, has been cooling down, which is a good sign. And I'm Albert Stepniak, a realtor with Coldwell Banker here in beautiful South Florida.